It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Hey everybody, happy Tuesday. Welcome back. Just after 10:15 a.m. Eastern time. I've got my broker platform up here, just monitoring the SPX for a little bit of a daily action. Had two trades, two winners. I've got one trade still in that I'm watching closely. I'm upside out about 20 cents. I'm looking to see if I can get a bit more time decay on that one. I'm looking for the SPX, hopefully after a gap higher, to just kind of calmly, it's up for the day. We're already getting, the tapes reading highs. Let's check the futures market really quickly. So I get it, like the market is trying to make a decent effort to get to maybe all-time highs. In fact, it is at all-time highs. Congratulations, SPY, you did it. The SPY's at all-time highs today, right in front of the Fed tomorrow. Interesting, huh? I think that we are probably witnessing the buy the rumor, sell the news right in front of our very eyes, because, what was this all about? CPI data, the market kind of manipulated to the downside first and ripped to the upside. This Fed decision, if we're getting the cut at 50 basis points, all this stuff has been pretty wild and crazy. Now the probability says, let's go. I guess not. Maybe the Fed watch tool is broken because everybody's looking at it. I'll see if this updates. But we've got the SPY at all-time highs. We have the Nasdaq looking to see if it makes a run. So we also had a decent sized gap on the Nasdaq to the tune of about 1%. We are sitting at the close yesterday with current price up about 0.7%. Microsoft announced a very aggressive buyback program as well as raising the dividend. That's pretty bullish for the Nasdaq overall. We're still sitting at this really interesting spot where this trend line and yesterday's close to today's gap, could we see a red candle appear and have this kind of, rip to the upside and then hitting resistance? We have this high, lower high. Is this going to turn for a lower high? Possibly. I don't know. But I'm trading it both ways, where I need 1150 to the upside or downside on the Qs. I've given myself out to October 4th to see if we can get a move up towards this gap fill. Will be about 490. My center price, I believe, is 470. Let me check my Qs for a moment here. My Q trade, it's a 470. Where's it at? 473. Okay, I've got a 473 center price. So if we get to 490, that's roughly $17 worth of wiggle room. And I think I gave myself exactly $17. I did. I gave myself $17 to the upside and then $20 to the downside for a slightly, it's a trade that looks something like this. On the put side, so let's say, let me draw this out. Let's have some chart time. So this would be my put side. There's my risk. There's my call side. And then here's my overall risk. Okay. So on an options risk graph, this would be my dead zone. And that's going to be my max loss. If I eat this, the debit that I paid, that's my dead zone. On the put side, I've got $20 max profit, and that's $20 per contract. So it'd be about $2,000 per contract. And then on the call side, I'm doing a max. This would be the call side. This would be $17 max profit. Okay, so I'm still giving myself some space to make some money. I paid $11.50 for the trade. Now, if I see a $15, $16, $17 move, that is enough to cover the cost of my trade. That's enough to get me a profit target that I'd be pretty happy with. If I close this out for, let's say I close it out for $15. Okay, so it's $11.50 credit, or I'm sorry, $11.50 debit that I close out for $15 credit. $11.50, close it out for 15, I make $3.50 a contract. That'd be a 30% return on that capital. That's not a bad profit target. So 15 or higher, I'm probably looking to protect some profit. as opposed to waiting all the way to October 4th and trying to go after my max profit. Because in order for me to get max profit, price would have to be above that sell call level, or it'd have to be below the sell put level. And if it just gets up there and I still have some time in the trade, I can turn a max profit here to maybe $17 or $18 and take the profit. I can turn the max profit here into maybe $14 or $15. And that's okay. All right. All right. So what I'd like to do today with everybody is just kind of do a little top down. We're one day away from the Fed. The watch tool is right here. Probability says we're going 50 basis points. I did some additional research tomorrow. This is some interesting narrative on just the Fed tomorrow. Look, the market is expecting a 50 basis points cut tomorrow. Now, let's see why the market would justify that. Let's see why the Fed would justify that. More importantly, is like, what is Powell going to say to justify why they cut 50 basis points? Because, look, it wasn't that long ago. Within the last month, I was saying it, Nick was saying it, Frank was saying it. I saw a lot of smart people out there, macro wise, talking about 50 basis points would be a terrible decision for the Fed. But the market seems to have priced it in. That Fed watch tool has not been wrong since 2009. And I don't think the Fed is going to make a surprise move. I think right now, like 50 basis points looks like it's baked in, and we're probably going to get it. Now, here's a reason why. Why is this okay? So right now, with the market expecting 50 basis points, if the Fed does 25 BPS only, now the market will be disappointed. Okay, and I'll put maybe disappointed because, of course, we don't have 100% certainty here, but the market may be disappointed because essentially the market front ran, right? It was moving ahead and kind of pricing in cuts, and all of a sudden the market got a little excited about that 50 basis points cut. So now if we only cut 25 basis points, the market might be disappointed. And I would say that price action likely stalls or drops. Okay, if the Fed does 50 basis points, we can say that it's priced in, and now it's all about the language, right? Because we have September, FOMC, we have October, we have employment, and we have inflation data. We'll have the October, we'll have FOMC minutes, but we won't have an actual FOMC meeting, right? So basically, this is a FOMC rate decision gap, right? And then you go to November, this would be the next FOMC. And so with the 50 basis points cut, the language from the Fed could be the following. They could be so creative and explicit on why they decided as a Fed, as a consensus, to make a 50 basis points cut. Why? Because we felt like it was the best to make sure that we are, in the appropriate place for inflation data is improving, but recognizing that there's been a softening in the labor market, we want to make sure it doesn't get worse. As if the Fed can control the labor market by cutting 50 basis points. They can't, but they might act in the language like they can, like they have some big influence on what the market does. Now, this could boost a lot of things, right? Cutting 50 basis points, like I've said, is mostly a consumer cut. Housing market probably picks back up in a pretty big way because it's not just now. I mean, it could be like fairly immediate. Like if you see the 30-year mortgage rate go down from 6.2 to 5.75 or 5.7, that's a pretty dramatic change from 7.8% that we saw near the highs when this market was, sitting here at these unaffordable housing prices, which it still is. But rates need to come down, right? People want cars, people want this, people want to refinance debt. Small businesses, right? The runway for cash is better when you're borrowing, 2.5% lower than what we had during COVID, or when the rates got really high in 2022. So this gives a window for the Fed to justify the bigger cut. Okay. Now, if, and this would be more of the surprise, what I put up here, how to write this. So if the Fed surprises with 75 BPS, which I don't think is going to happen, it's nowhere on that CME watch tool, right? If the Fed surprises with 75 basis points, market reaction can be wild. And I don't think it necessarily is good or bad, right? It can be wild because it's not expected, right? this is the surprise. And so this would probably be the highest case for volatility if we have a surprise move. So in summary, this is what I'm kind of thinking for tomorrow. The market's already making its move and expecting the Fed to cut 50 basis points. I really think that the language the Fed uses tomorrow, or Powell with his press conference, he can be spending the entire press conference justifying why from now until our next rate decision in November, here's why. And he's going to do it in his like crafty way where he'll say there's good things happening, there's bad things happening, we're aware of both, here's why we made the decision, blah blah blah. Let's see what price action does. Price action is going to be ultimately our best friend this week based on tomorrow's close, based on intraday price action, based on where the week closes. All these things are going to matter. But right now it looks like the Fed is in fact highest probability going 50 basis points to cut, with the gap from now until November. I do think that 50 basis points, and it's funny, like I didn't have this conclusion 2 weeks ago. I thought 50 basis points would be a full admittal from the Fed that they messed up and they misstepped. But another thing that's not been being talked about is that there's a big comparison between the Fed funds rate and the PCE, and there's a big difference between the Fed funds rate and the 2-year. Okay, the 2-year right now, the 2-year yield is sitting at 3.6%. Right? This is like I think it's like a 40-year extreme of the difference between the official Fed funds rate and the 2-year yield. It's like a 40-year extreme. And so the Fed is looking to tighten that because every time it's been this stretch, we've always had a recession. And there's so many things that's like, we have a recession. It's close to recession. This signals a recession. The Fed is right there. Like, it feels like we're kind of on the brink. And if somehow this Fed this week, tomorrow, for the next couple months, can give the type of language to assure the market that things are okay, we're doing this, and we're actually getting caught up, and based on the data we see and the trends and blah, 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 and whatever Powell says tomorrow, if the market doesn't tank to the downside, then the Fed is doing a pretty good job of threading the needle with this soft landing scenario. All right. So that's about all the narrative stuff I want to talk about today. I want to get into kind of top down and see where else we're going. But does that make sense? Look, a week ago, 2 weeks ago, I was still in the camp of going 50 basis points. I think they're overstepping. They're clearly trying to cut to just like stall the realities. And I don't know if the market's going to buy it. The market is so good at sniffing out crap from the Fed. And it might still do it. But look, Microsoft was a big deal, raising dividends, offering buybacks. You got a lot of the biggest companies out there that right now, if they want to keep their party going, keep their stock prices higher, they're doing buybacks, they're doing splits, they're making things more affordable, they're enticing more order flows in. And right now, the path of least resistance is still pretty bullish. The SPY just broke highs today. We have all-time highs in the S&P. You're going to see that as a headline today. The futures market ripped overnight, right at 6 p.m. actually. And today we're just kind of gapping higher, drifting higher, but not a lot of price action intraday. The Dow is sitting at all-time highs. The Russell, what's the Russell doing today? The Qs are up. The Russell's up. Russell's up 1.34%. The Q's up 0.68 with the futures market way up at 1.9. The S&P futures market up 1.6 with the SPY up 0.5. I do wonder if the SPY actually catches up and still finishes and pushes towards 1+% for the day, or if it's like the futures market is way ahead, and we'll see what happens tomorrow. But anyway, 0.4% on the Dow, 1.3 on the Qs, or I'm sorry, 1.3 on the Russell. So, small caps are looking better, kind of outperforming their counterparts with the large cap Qs and SPY. VIX is still down. We're at 1691. VIX is down 1.28%. Profit. Freaking sweet. All right. I got to post this in a Telegram right here. Quick update. Let me update this. And profit.
Hey, Chris.
Hey, Frank. What's up, dude?
Not much.
Okay.
How's it going for you today on the trading side?
Excellent. I just had 3 for 3 wins this morning on a little SPX action, so I'm pretty happy with that.
Nice. What are you plugging in right now?
I've got to type in a message to update this. Trade 3 profit. Not a bad morning. Okay. So Frank, were you listening? If not, I want to get your feedback. Look, man, it looks like 50 basis points is a reality. And so I was I was considering, like, I didn't think it made sense a week or two ago, but I think now with the gap between September and November, I think it gives the Fed the runway and the window to like justify why, because they could say, if we only needed 25 basis points and we had more sensitive data coming in over the next month, we want to make sure that we kind of get ahead of it. So that way they can maybe cushion for softer employment data that maybe comes out in October. In fact, we'll find out October 4th because we have non-farm payroll. So more unemployment claims, non-farm payroll average earnings and unemployment rate plus our job numbers. We can see where those trends are going. If the trend, shifts all of a sudden, if we go to, let's look at Edge Finder here and go to the labor market. I mean, non-farm's been terrible, and we know it was going into July and August, where we saw, everything was kind of collapsing at the same time. We go to employment data, labor market data here, NFP, ADP. Let's take a look at all this stuff. So NFP. So here's Edge Finder NFPs. The trend has certainly been lower. And I mean, I suppose if we came in with non-farm payroll, this would be where like the Fed would just absolutely thread the needle. If all of a sudden non-farm goes from this 114 low on a miss of forecast, and all of a sudden we go up here. If we printed like a 160, right, and all of a sudden the trend is back up, and what we might see is that steepening in the 2 and the 10, like I talked about. We might see the 2 and the 10 actually dip back down and actually go back lower. And maybe it gets inverted all over again. I don't know. But I think there is an opportunity for employment to look better. And I think going that 50 basis points may see the market actually just kind of like the momentum that it's in. I still don't feel super comfortable. And what are your thoughts about this? I still don't feel super comfortable about just full on bull market melt up for the rest of the year. I think we're still going to have some volatility coming into the election. I still think we have volatility by the end of the year. Nobody knows the future, but it's going to be pretty wild, man. So anyway, 50 basis points.
Yeah.
Are you convinced? Is it the right decision for the Fed or not? What are your thoughts?
I don't think so.
You don't think 50 basis points
honestly,
you think it's incorrect?
I don't know if it's necessarily incorrect. I just don't agree with it. I think it's going to happen now, but I don't think, that the Fed should really be stepping in until they really need to be. But that's never been the narrative for them. So the fact that they're even cutting this this time around is not something that I would necessarily agree with.
Okay.
And now seeing a harder cut than what we expected or what the Fed has been projecting this whole year was incremental cuts of 25 basis points. Would result in sort of like they have the luxury to do so. It's fine for interest rates to come down because inflation has come down because the job market is doing okay. But the fact that they're going deeper, they're doing 50. Some analysts on CNBC and Bloomberg I was listening to yesterday were begging for a 75-point cut, which probably won't happen.
I think that's a terrible. That to me is like you're asking for an emergency cut. You're asking for the Fed to admit that they're dead wrong. I think 75 would be probably the worst reaction for price, in my opinion.
I think they're already admitting that with a 50 basis point cut.
Yeah.
I think if everything was fine, we would see like a year or two of 25s each consecutively for the next several quarters. But now we're seeing a 50. Who knows what they're going to do in the next meeting? But they haven't indicated that they were going to do a 50 basis point cut. This is just what's on the Fed watch tool. So, I mean, it's not necessarily a guarantee, but a day before the interest rate decision, we're seeing 61% chance that there's a 50 basis point cut. That's a pretty solid chance for that to happen.
Mm-hmm.
I think this is, in my opinion, the bigger the cut, the less bullish I am. I think we could get a positive reaction, at least at first, but I don't think going into Q4, this is what we want to see.
Right.
And 2025 is not looking good, in my opinion. So honestly, the bigger the cut, the more bullish I am on gold, because that means the economy's worse than we thought. Jobs market's not good.
Yep.
Fed's got to step in.
Yep.
It's going to devalue the dollar either way, 25 or 50, 75, whatever.
Yep.
I think gold is going to outperform. It's already outperforming the Nasdaq. It's up like 25% on the year. Tech
Hmm.
stocks, the tech index itself is like 18%. So I think gold will continue to outperform. And if we get a harsh reaction to the downside on this decision, I'm probably going to be looking to pick up GLD or something like that.
Okay. Um, that was great. That was great commentary, dude. I do wonder, and I've said this for the last several months. I said for the market to still finish at all-time highs this year, the dollar has to get weaker. Look, man, I don't think it's a secret that the dollar gets weaker, the stock market typically goes higher. For us to have like a crazy and look, if Frank, if the market finished, if the SPY is over 600 by the end of the year, if the S&P is over 6,000 by the end of the year, is that a doable target for you, or is that like completely irrational, makes no sense? It's single
How
digits
far up
away,
did you say?
6,000. It's single digits away. Like we're talking like maybe 4 to 6% more upside to get to those levels, because dollar weakness could help
6,000 by the
drive
end
that
of the year?
by the end of the year. Yep. What's that percentage move right now? That
Um,
should be less than like 5 or 6% from current price.
yeah, let me take a look.
Okay, because
So an SPX
we just
500,
crossed
it's
all
a
time highs.
6% move.
Yep. So good. It's 6%. Yeah.
I mean, it's doable. Obviously, like 6% is not a huge thing if we're talking about like a year's worth of time or maybe the next. I mean, we only have like a couple, 4 months left,
Yeah,
three
I'm
months
talking
left.
about this though. I'm
Um,
talking about potentially blowing the top off and going to 6,000. And look, I think that the scary part is how much volatility comes with a 6,000 move and then potentially a snapback into the midpoint or a snapback into maybe these lows. Um, but I just look, man. I don't. I mean, we think of September as this terrible month, and we started out instantly down, 3 to 5%, and now it's right back to all-time highs. It's like this market doesn't really give a crap about anything other than trying to justify going higher. The Fed's playing the game. The Fed's putting essentially the puts in place. Money supply is increasing, by the way. Global money supply is increasing. But look, this market is fueled by debt and deficits, and that's how this world grows right now. This is the only like China's not a part of this game right now, but the U.S. certainly is, and everyone else is too. And as John Maynard Keynes says, the market can remain irrational longer than traders remain solvent. I think the pain trade still means more upside. It would be weird. I'm not going to lie. It'd be weird to see that August. Look at the monthly chart here. Okay. If we go monthly chart on SPX, look at these last couple of months with just a lot of volatility. But you can clearly see that the market's just like stretching and trying and trying. It's given everything that it can just to try to finish higher, which I do think ultimately finishes in a bad way. Like we stretch to some point that we end up breaking something, and we have a really nasty another 10% spill, another 10, 15, 20%. I don't know. But right now, this market is still enthralled with the idea of going higher. And August is a perfect example, dude. Like August
yeah,
had all of the elements of holy crap, this is some scary stuff, to right back to the highs again the whole month. Like it was a ridiculous turnaround. And even that, I mean, it's obviously like a fraction of that for September, but we still had a decent. I mean, September's made a move so far of 260 points. I mean, if I go to the, if let me put on a monthly average here for my ATR. So the weekly average is 146. Let me change this to a monthly. If I go to a monthly chart, I'm curious what the monthly average is. Okay, the monthly average is 309. I mean, we've already had almost an entire month trading range within a week. From post Labor Day to now, we've had almost an entire monthly trading range. So, I mean, long wicks are crazy, but this market is just doing everything it can to justify buying the dip. And I just think that at some point it breaks. And look, I'd like to see more volatility, but I think what I'm going to do is rather than trying to play bear call spreads and call tops, I'm just going to hedge, dude. I'm just going to hedge on MES. I'm going to hedge on MNQ. I'm going to try to put my puts and stuff out of the way, generate some income. If the market wants to melt up, this might be a 2018 all over again, where we are, seeing that the Fed has done everything to kind of keep the market afloat, and then the market says, "Okay, we priced it all in. Now it's garbage." December, January, maybe we have a nasty election, or it's wait till the new administration starts in January, and so this market ignores what's currently going on, ignores the current election in November, melts up all the way to the end of the year, and then start the new presidency. If we're sitting here at all-time highs, I kind of want to short the market in Q1, Q2 of next year, like hard.
yeah.
So
So
Anyway, that's kind of where I'm at.
I'm thinking the same thing, and my narrative in July is coming back up again because we're at all-time highs
Okay.
once again. The higher it goes, the worse it's gonna get.
Yeah, I
So
agree.
if we do go up to that 6,000 zone that you're talking about, I think
Mhm.
that sort of correction, that what we think is going to happen, is probably going to be steeper. Um, and I'm not going to necessarily be bearish. I think overall, I I tend to lean bearish in this environment, but
Mhm.
I don't think I'm necessarily going to go all out short on things. I think I might just, I've been doing these same thing you have, credit spreads
Yep.
on SPX. Not I think it's limited to the upside. Um, if it keeps going, I'm going to keep thinking it's limited to the upside, and uh, at some point, I might go short. I might just take a bigger position short, but I got my hedges. I got VIX calls. I got credit spread. So I'm selling. I'm still holding stocks. Like I'm bullish oil stocks. So I am fixed to be like, if the market goes up, it's going to be fine. But if the higher it goes, the less comfortable I am, and now I'm very uncomfortable because we're at all-time highs once again. So I'm not going to be like going heavy to the long side. I'm just going to be trying to play it safe, and selling these credit spreads out of the money. I got a 56.80 by 56.85 for today, um,
5680,
and that's on the
56.
SPX.
Okay. That's 5680. Okay, I'm gonna show you something here, dude. We've got a gamma level up to 5700, so potentially late afternoon. And again, I don't know, Frank. You might be good with that. 5680. Look, man, if you can you tell me why you chose those levels? Just tell me why you chose 5680.
I went above all-time highs on SPX,
Okay.
which on that instrument is 56.69.
Yep.
And I saw that it had $1 or more premium, and it would be by the end of the day. So I took that. We gapped up
Okay.
higher.
Yep.
So when we closed, we gapped up 0.4%. We're up. Let's see what this move
We're
was.
about
We're
0.55
up
right now
another
from
point,
yesterday's close.
and we're up a 0.2% on today's open.
Yep.
So we're hitting kind of a limit, I think. I don't really understand a full blown move to the upside. Um, so this is kind of the risk I'm taking. But
Yeah.
I think now gamma levels are at 5,700 because of this gap up. But I'm not necessarily confident that we're going to see, you know, let's see, how hard would this move be? So
Yeah. I
1%
so
from here,
go ahead.
1.5% on the S&P in like a day. I don't know about that.
Yeah. Well, my chart, the only thing I want you to be aware of is my largest gamma strike level right now is 5,700. So this could be the magnet for today's price. Um, I mean that's a pretty big drifty move ahead of the Fed. That makes me a little bit more, kind of price aware and price conscious of like some volatility and some pullbacks and gap fills tomorrow. I also wonder if, obviously I want you to win the trade. I was just asking like if like I'm not saying I'm calling top center better than you are, but I'm saying like I saw this 5,700 this morning. I like the idea of if I want to put on a bear call spread, I like the 5,700 and trying to get filled at like $2 because by the time price gets up there, if it's trading for $1.50 or $2, you can reduce the size of that risk.
Well,
Because
this morning it was at 13%
I know.
delta.
I know it's
So
it's the same thing I did in that broken wing at 96%. Like that was a 4 delta and I got smoked on that trade. So anyway, we'll watch it. I hope it's pretty quiet. I'll certainly keep that 5,800 or 5,680 in mind. And you and I can high five if you get that trade right. So I just want you to be aware, like we
well,
might hit 5,700, but we could rebalance by the end of the day, dude. It's a cash settled instrument. So if we fall wait, let's say we stretch to 50, 5690 or 5700, but we fall and rebalance the entire day. We come into FOMC tomorrow like pseudo neutral. So anyway, I'll watch it, dude. I think I was curious, like, I get it's above the all-time highs, but I was just asking, like, because I had 5700 in mind
It's
for as far as the top.
yeah, it is risky. I also have a bull put spread that I took this morning too. I have the lines marked out on SPX.
Hmm.
Um, so I have a 56.45 by 56.40. So that was $1.15 credit. And then $1.05 credit for the 56.80. So if we
Okay.
stay in this range, it'll be great. If we break it and say we just keep going, I'll take a loss on one and I'll pair some of the loss with the bull put spread, but it will be a loss for the day.
Got it. All right. So we'll keep an eye on those levels. Let's take a look at gold, silver. I'm getting more and more excited about bigger plays on both of them. I would personally love to see a pullback on gold if we can get one. I'll go to gold right here. So I want to talk, dollar for a second. Let's go dollar, oil, gold, silver. I've got to do one thing really quickly. Give me a second. 917. Okay.
Why do you think the dollar is up on higher expectations of a 50 basis point cut?
I think it's just noise. Honestly, I don't think it matters right now. It's like the dollar's sitting here, at these support levels. Um, look, man, it'd be a crazy trend to see this dollar from June to now have the drop that it did and see the dollar just continue to go with a full-on breakout. We have not broken these lows since 2023. The last time we'd be breaking these lows, we had this little fake out during July of 2023. The last time we had this big run in the dollar, this is when we came off these crazy lows in 2021. Dollar got like ridiculously strong. That was also the market pricing in the rate hikes. Now the market's been pricing in rate cuts, and I do wonder, you know, there's a lot of room to the downside. If this market's like, you know what, screw the dollar. There's a lot of room to the downside, dude. Like this entire dollar move from 2021 to the peak here in 2022 when the market topped out, this dollar could drop all the way back down to 93 or 92.50 and bye dollar. Hello, lack of purchasing power, debasing, and hello, gold, silver, Bitcoin, stocks, like assets rip. This could be like the weirdest irrational inflationary play. But if you're getting a debasing dollar, like you kind of need assets to go up. I'm not saying it's good or bad, but it's going to be a big move if we have it. I just don't know if the market's that willing to say that the dollar is the weakest of everything compared to, is the US economy in a worse shape than the Eurozone? I don't think so. Is US economy in worse shape than the UK? I don't think so. Is US economy worse shape than Canada? No. Australia, New Zealand. I mean, Australia, New Zealand rely on China way more than we do, and there's obviously smaller economies. So I want to see it. Basically, that's my point. I want to see the dollar, if it's going to break, make it obvious, right? Let's see like the break and the flag and the go, or the break and the retest and the go. I think there's opportunities to trade it. I just don't want to force any trades now and think like the dollar's doomed. It's like, I mean, we could absolutely pull back and have a complete different reaction what everybody's thinking. Does that make sense? So we're sitting here at lows, and
Yeah,
I'm not taking the bear traps. If we fake out and rip back up here, and also the dollar yen is another one. The dollar yen too, like sitting here with oversold conditions, right? So if I go to, let me find another workspace here. I'll go to where's it at? This one's going to be a bit messy, but I'll go to my dollar yen. It shouldn't be that bad. Okay. So if I go to my subgraphs here, that's ATR base. Oh, I'm looking for, oops, this is the wrong one. Wrong workspace. One of my 1,000 workspaces here. Where's it at? There it is. This guy. Okay, now let's go dollar yen. All right, dollar yen. Go to the daily. Okay, so dollar yen. This is what I'm seeing. there's a ridiculous amount of divergence, and it's not surprising that we're getting a bit of a morning star in the dollar yen today. Um, I like the dollar yen long, at least in the near term. I think there's some pullback levels to come back. If you look at the dollar yen with this low compared to this low, we're starting to rip up here. We have divergence. We have oversold conditions with divergence. I could see the dollar still pulling back to, I mean, I think it's a fade the dollar move. Like if the dollar yen pulls back here to like 146.50 to 148, I still like selling dollar yen back down to the lows. But I think if we have a risk on flow, it's going to be weird, man. Like the dollar yen is moving very differently than others. Look at the Aussie yen, not to the flash crash lows we saw. CAD yen, not to the flash crash lows we saw. Euro yen, not to the flash crash lows we saw. And this is what I thought that the yens could be doing. It's like we had this huge flush. The dollar yen was the only one that broke the lows, but the other ones are not. I could see this, Frank. I could see the yen crosses giving us this, pulling back to the same level we saw with that pullback post August 5th bottom, and the yen gets weaker. We have some risk on, or we have some rebalancing in the yen crosses. But this chop probably still finishes lower later, but I wouldn't be surprised. Like right now, there actually looks like some pretty good opportunity to be long, stop losses tight, and see if the yen gets weaker. Now, I say that I definitely want to have stop losses in if I'm going long against the yen. The BOJ is also coming out Wednesday night to Thursday morning, so they're right after the Fed. And we know that that's happened in the past where right after a big FOMC announcement, the BOJ is right on top of that. And there's all sorts of crazy action that can happen during the Asia and the London session the next day. So I think as long as you have stop losses in, it's not too bad. And the yen, I mean, looking at the Japanese yen futures, looking at the Nikkei, I could see this bigger swing. It's just a big price action play. Here's a giant swing. The market finds a way to find a wave structure here, and this internal wave structure, look to sell it later. But I would like, this is euro yen, but I'd look to sell this at like 162, 163. Dollar yen, I'd like to sell it at like 148 to 150. So I don't mind getting long with the stop loss, because if you look at the upside here, I mean, if I'm long with a stop loss below this turn, my reward potentially up here, I mean, that's a really good opportunity to be long, maybe a 2.5 to 3x to 1. Not a bad trade. Is this the guaranteed bottom? No, we could have like another spike lower and then it reverses and still goes. But if I'm calling a direction here, I wouldn't be surprised that the dollar yen goes higher and the other yen pairs start to go up, and we see a weaker yen over the next maybe 2 to 3 trading days or the next week or so, and this actually makes some headway to the upside. So that's a little prediction that I'm willing to call out right now. I think the yen gets a little bit weaker. Thoughts?
Okay.
What do you think?
I
Disagree? You think
can
this yen's
see
just
that
just
happening.
on a trail to the downside?
I think the yen is ultimately going to be stronger. Um,
Ultimately.
and I think in the longer term,
Hmm.
I think every time UJ pulls back like this, like it comes
Uh-huh.
up, I think it's setting up for another short. Um, I don't think that the dollar is very strong. And I know like the argument is, well, the dollar is like better than all other currencies. Like why would it be, worth less than others? I don't necessarily think it that matters. I think because what we're doing as a central bank versus what Japan is doing,
Hmm.
versus like our economies, I think that's just sort of a main driver of sentiment. And I do think the dollar is, ultimately stronger than the yen, but I don't think like that it's going to continue to push higher, if you know what I mean. I think this is a big unwinding trade because we're in heavy risk off right now, and the
Yep.
market doesn't really seem to think so. But if dollar yen continues to unwind, uh, like we've been seeing,
Yep.
I think eventually it's going to catch up to the stock market, and we're going to see some pretty ugly moves. But I have a
Yeah.
point. I have a plan or
Okay.
question for you. Um,
What's the plan?
you know how we talked about those broken wing butterflies, but we would take them as like like buying puts out of the money or deep in the money. I'm sorry. So buying these puts deep in the money, broken wing butterflies, and then buying calls deep in the money, doing the same thing. That's like an iron condor trade, but it can be cheaper. What do you think about doing
Uh,
that for like
deep. Are we talking in the money or out of the money? Deep in the money, right?
deep in
Here,
the
let's
money?
build one.
But
Give me an what do you want to look at? What asset? You want to build one on like SPX?
okay, yeah,
Yeah.
let's look at SPX
Okay.
and
Let
let's
me
do
let me build. I want to build one out. So we can do a broken wing. We can build it. This will be kind of nice. Let's do this. Let's go SPX. Give me some strike prices. So I'm gonna build out. Let's do a You want to call one for like Friday? Let's just look at a. Let's see. I'll just go all edit spread,
so September
and so
20th.
I need 6 option legs, right? So I need the sell in the middle, and then 2 buys, or we can sell the middle and go above and below with the broken wing. Okay, so buy, sell, buy, sell, buy. Calls on top, puts on the bottom. All right, so we're doing SPX. Give me some legs, give me the broken wings, and let's actually construct this on the risk graph. Let's see what it looks like.
So let's say we break 70 or 5,700 by next week or by the end of this week. So that would
So
be buying a put at 5,700, selling a put at 5,710, buying another put at 5,715.
okay, so you want to give me the sell legs first. What is up with my font's looking weird. All right, so we're gonna. What's the pin price?
Selling,
It's 57.10,
yes.
and that's a 57.10 put because we're going in the money, right?
Yeah.
Right? Yeah. Okay. So sell the 57.10 put, and then buy the 5,700, and then buy the 57.15, right?
Yep.
Okay. Let me get that one ready. So 57. All right. So on the put side. All right. What's the expiration year? Can we just go out to this week, the 20th?
Yeah.
Okay, we'll do the weekly expiration on the 20th. Okay, so on the put side, I'm going to sell the 57.10, and I'm going to buy the 5,700 and the 57.15.
It looks like
Okay,
$2 credit for me right now.
okay,
It's
so I
actually
can
all over the place.
sell, I can buy. So I'm selling the 57.10 2 contracts. All right, so I've got the 2-1-1 there for the butterfly spread, the put butterfly spread in the money. Now, what about the call side?
Okay, so let me look at this chart again. Okay,
Okay,
maybe we break, let's see, say 5,600. So
okay,
we'll
so we
do
sell the
our
56.
pin price will our pin price will be at 5,600
Okay, then
and
you'd go 56.10 by 55.95. Is that right?
that's right.
Okay. Call, call, call. So we're selling the 5,600, 2 contracts, and then 56.10 and 55.95. Okay. Here's what it looks like. So you can take that trade for $6 to $7 credit. You do have a dead zone in between. You've got a profit peak, but if price goes beyond those levels, you get paid. So price is right here in the middle. This is all a dead zone. What is the risk here, Frank? We're looking at collecting about $5, $6 credit, but we have what's our widest? 15 or 10? Like 10 points
Um,
wide?
these are 10 points wide, yes.
Yeah,
Or
so 10
15.
wide. Well, we're still collecting $5 or $6. So I think the trade is going to be if we get a $6 credit, we're risking about $4. So that's going to be our max risk in the dead zone is about $300 to $400. this is not a bad trade, especially in a cash settled instrument like SPX. All we need price to do is, make a run above or below. We have a profit trap by expiration on Friday. We'd have the guaranteed credit one side or the other. Not a bad trade. It just means what if price doesn't get above or below. And so we're looking at a dead zone here between about 5,700 and 5,610. So we have about a 100-point wide dead zone by Friday. So I mean, as far as like the economics of the trade or the cost of the trade versus reward to risk, like all that actually stacks up really nicely. There's no assignment on SPX. It's cash settled. I kind of like the trade, to be honest. I mean, price obviously goes nowhere, but if I'm only risking $300, I think I'm going to take the trade, dude. The only issue is managing the trade is not one trade. Like I have to take basically the call side, put side, manage them separately, which is okay. But I mean, in the money, we're getting ourselves a chance for price to move. So I don't know, man. I don't think this is bad. If you can get like, I'd say $6 or $6.50. So we do these in the monies. This is kind of similar to how I trade the earnings plays when I go in the money credit spreads. I try to get about 70% of the premium. So I like this trade. I'd probably, if I'm going to make any tweaks to this, I might look at the deltas of the put side and call side, simply because. So I kind of like this idea better than trading just the normal butterfly. And also, let me see something here. If we go a little bit wider, let me check something here. If I edit this and if I sell the 56 and I go, let's go 10 down and go 15 high. Let's go 10 and 15. Okay, so 10. Let me go 15 down and 10 high. See what that does. A little bit wider. So same amount of credit, 56.95, 56.15. I shortened up the dead zone just a little bit, and we're also kind of right in the center of that. Not a bad trade, dude. But now our risk is probably, again, if we collect $6, we're still risking about $4. If we're wrong, that's within about I guess an 80 point dead zone, 80 to 85 point dead zone. So
Yeah.
I kind of like the trade, dude. And I mean, here's what I would try to do. If I'm going to get filled on a trade like this, I'd probably set it like a $6.50 to $7 credit trying to get filled, which means individually, if these are equidistant, if these start out roughly with the same kind of delta as a pin price, then I would want to have, if I'm getting like $6.50, that means I want $3.25 per trade. That makes sense? So are you doing it equidistant, or are you kind of picking your levels? Because if it's equidistant, we can expect to get 325 per trade. But if it's like, the put side is way lower than the call side as far as off of center price, like right now it looks like my the in the money puts are just slightly closer to real price, slightly, but just by a little bit, versus the calls.
I was looking at the chart. So if we go to my screen, these green lines, 5,700. That's, you said we had gamma levels to reach that today.
5,700,
so
yeah. Yep.
I'm assuming by Friday it's probably going to be more probable. And then I picked, this sort of gap right here. So from, what is this, Friday?
I
think somewhere around here we could retest that.
Okay.
I didn't want to go too close. Like I wasn't trying to look at 56.40 or something.
Sure.
Because I know that the trade would be really expensive and the payout wouldn't be too great.
Yep.
So this would be, if we do see a big sell-off, I think it's going to take out a lot more than us ripping higher. I think it takes more candles for us to get to this spot. But if we have one bad day, we could wipe this out. So
that's true.
I kind of like 5,600, and we have 3 days to move, 80 points?
Yeah, I need about 80 to 90 points. And so the profit trap is like that's the lucky lottery trade versus just getting beyond those peaks. If we get price to go beyond the peaks, we still make money. I mean, collecting $5 or $6, dude, that's a great trade. I would love it. And again, one side's going to be a loser, right? So I mean, if we're collecting 530 we lose on one side. So the net result here, you have to remember this too. If I did a $6 credit, okay, and we're getting roughly, let's say $3 per trade, the reality is I'm getting $6 up front, which means I'm risking on one side. I think I'm risking.
Hey,
Am I
James.
risking? Oh,
I
are we
just
out of time,
realized we
dude?
went
Oh
7
my
minutes over.
gosh.
Yep, I'm coming in here. I got to cut y'all off. We've
Oh
got
my gosh.
Nick
We'll
Phillips
never know what
very
happens to the broken
patiently.
wing butterflies.
Yep, sorry about that, but we're a little over time. So, Chris, Frank, thanks for coming on today. We're going to get more of both of them throughout the week. So, we've got FOMC tomorrow. Chris is going to be here covering everything FOMC tomorrow. We're going to be streaming all day, but
Yep.
we've got Nick Phillips waiting, so we're going to go ahead and transition over to him.
Cool. All right. Thanks, Frank. Hey, if you want to take this offline, let's continue this. I want to get this thing priced out. Sorry, Nick. Enjoy your session.
Yeah,
Thanks,
sorry.
James.
We'll be
All right,
more
see ya.
mindful of it next.
All right, we're going to take a really quick break, and then we'll be right back with Nick Phillips right after this.
If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Hello. Welcome to the 11 o'clock segment of the A1 Trading Show. Chris and Frank, you guys are always killing it, so I don't mind hanging out and waiting for a little bit and actually learning a little bit from what you guys are sharing. So definitely enjoy every time I jump on and I see you guys and get to hear what you have to say. So moving into today's session, I have been pretty hand city, I guess I should say. I've been sitting on my hands all morning. I watched CAD CPI come out as well as U.S. retail sales. U.S. retail sales really didn't give us much. CAD CPI gave us a slight CAD downside. Still didn't take anything though. I'm really not interested in being involved in the market on a day like today, being pre-FOMC and a pretty, I would say, knife's edge FOMC. It seems like the markets are, we've begun to price in a bit more for a 50% or a 50 basis point cut than we were even yesterday when I was looking at these numbers. I was looking at the Fed watch tool last night. I believe it was last night. And we had a basically 50-50 split. Let me see if I can pull up yesterday's. So as of yesterday, this was 52% and this was 48%. So the markets have begun to aggressively price in a more aggressively price in a 50 basis point cut idea for tomorrow. So need a bit of water. The challenge for me with the Fed cut tomorrow, the challenge for my outlook is this aggressive of a cut, this hefty of a cut is almost scary because it sort of implies that the Fed is behind. They tend to, in my opinion, or in my experience, they tend to want to do 25 basis point cut increments. They don't want to scare the market. They don't want to, they want to take things nice and steady. I think the last time they did a 50 basis point adjustment was in 2022 when they were fighting high inflation. But a 50 basis point cut right off the bat, to me, implies that they're behind the curve. They are worried about the softening labor market. They're not as concerned to for the risk to inflation. If they're willing to go ahead and cut 50 basis points and front load these cuts now, um, that I believe that the risk for a resurgence of inflation is significantly higher if we begin front loading these cuts now, especially ahead of the holiday season, which of course will kind of skew things, I think, a bit on inflation side of things. Um, but either way this goes, we are looking at cuts tomorrow. If we don't get a cut, that will absolutely be a monster hawkish surprise for the markets, and I think we'll see stuff like, Nasdaq ES fall to the downside, USD pop to the upside pretty hefty on a zero change, which I don't think anybody thinks that's going to happen tomorrow. Now, if we get the 25 basis point cut, I'm not getting positioned ahead of this. I never get positioned ahead of uh, data like this. I'm not a swing trader. I'm a scalper. So for me, I'm not going to be interested in getting positioned ahead of it. But I will say that a 25 basis point cut would be, I think, dollar positive. So if you guys are looking at something like UJ buys, um, a 20, you're going to want to see a 25 basis point cut. Now, I also think that it's going to be a bit of a challenge trading this tomorrow because there's going to be volatility like we haven't seen, I think, in quite a few FOMC meetings with the probabilities of a 50% or 50 basis point cut being as high as they are. Either way it goes, if we get a 25 basis point cut, I think the markets are going to react to that pretty heavily. But it's just a matter of how solid the volatility will be. So, regardless, to simplify it, on a hawkish stance, as far as I'm concerned, anything 25 basis point cut or less, along with a concerned Powell. So Powell comes out and he's overly concerned, I would say, about consumer side inflation. I would anticipate that to be leaning hawkish, which would theoretically push the dollar to the upside. A 50 basis point cut, while it's already 61% priced into the market, that's still pretty close to 50-50. There's going to be some calibration, in my opinion, if we get that. I would like that in order for me to take something like dollar downside or equity upside off of a 50 basis point cut tomorrow. I also want to see um, a pretty neutral Powell, a nonchalant. We're not worried. We think we're taking the appropriate steps. w- You know, uh, we're confident in what we're doing. All of these sort of a 50 basis point cut to me communicates that they're behind the curve. But if Powell can come in and say, nope, we're doing what's appropriate. We're doing what we feel is necessary to keep the economy in balance. Cool. That leans more dovish than we did a 25 basis point cut. We're not super confident about consumer side inflation, yada, yada, yada. So 50 basis point cut plus a relaxed Jerome Powell, um, plus a 100 basis point cut dot plot projection for the rest of the year. That will give me good dovish indications. Yeah, 62%. Anton says 62% last estimate for 50 basis points. Yeah. So I'm seeing 51 on FedWatch tool, or 61 on FedWatch tool. But yeah, that to me communicates, still a pretty, no matter which way this comes out, there's almost half the market is calibrated for one or the other. we're obviously skewed towards the more aggressive side, where the odds are our pricing is skewed towards 50 basis points, towards 50 basis point cut. But because these are so close to this 50% probability area, I don't want to say it's 50-50, but from a scalping opportunity standpoint, a 59% possibility for one and a 41% possibility for another, if they float right around in this area, either way this goes, I think there's going to be significant recalibrating across the entire market. So if we get the if we get the 25 basis point cut, I think we're going to see calibration in a hawkish direction. We're going to see the market go, oh, okay, they didn't cut as aggressively as we anticipated them to. That leans more hawkish. Um, Likewise, if we get this 50 basis point cut, oh, they're cutting pretty aggressively. They must be behind the curve. Dovish anticipation of, like, the Fed has to catch up to a place of balance where they feel more comfortable with 25 basis point cuts, because that's their standard, And the other thing about the Fed is they don't like to shake the market. They don't like to surprise the market. So I think a 50 basis point cut it's aggressive and aggressive enough to spook the market, which does make trading the dollar around this information a bit tricky. But everything else, I think, should move in a typical and in line with a typical dovish outlook. So, all right. So pre-positioning wise, I said this to my private group this morning. I love where the Doxy is at in the case of a 25 basis point cut. Like, if we get that 25 basis point cut tomorrow and the dollar continues to hang out around this area, this is beautiful. This is a double bottom. Um, we would 25 basis points, again, in my opinion, would be leaning hawkish, which means, again, in my opinion, the dollar is skewed too heavy to the downside for a simple typical 25 basis point cut. We still have historically high interest rates. We're sitting at 525 to 550, dropping down a quarter. 25 basis points is still incredibly high. It's still historically high. So those two things combined with the positioning of the dollar, this makes for a prime dollar buying opportunity, in my opinion. Now, where does the dollar go from here off of a 25 basis point hike or cut? That is a tricky question. I think the main target for me, the biggest target, is going to be right up here in this 104 to 105 range. I think back here into this consolidation is a reasonable area. Now, obviously, I don't anticipate this happening all in one day, but I could see a 25 basis point cut being followed by something like this, where price, maybe hits this area, does a little head and shoulders, and then continues up into here. And then, we start recalibrating based on new economic data coming in. That would be my expectation for Doxy. I know you guys trade things like NQ a lot, so we can tap on NQ real quick, which positioning isn't as great. I shared this on my Twitter yesterday, on my X account, I guess I should say. I anticipate a bit of hanging out here until FOMC tomorrow. I don't really see any major moves happening for NQ. In an ideal world, we get a bit of a hawkish release. Ideal world for me. We get a bit of a hawkish release, which should theoretically push NQ to the downside. Now, the reason why I like this so much, I like this idea so much is because I am sort of sentiment wise, I am not as big of a believer in the everything rally, which, if that's what I've coined it for this year. The everything rally is no matter what happens, no matter what the economic data says, no matter what the Feds are saying, no matter what's happening in the market, the everything rally is equities upside. We've seen this pretty much, I believe, since, I don't know, it feels like forever. It's just been equity upside, equity upside, equity upside. The story that never ends is equity upside. If you guys have been paying attention to my segment of the show, I marked this zone up, I think, I don't know, a couple weeks ago, last week sometime, maybe 2 or 3 weeks ago. I think when we were hanging out here, I marked this area up as a good buy zone. Sure enough, price dipped down into there and bought up. And I believe the exact same thing happened on NQ, except it dipped farther below my buy zone. My buy zone was at the bottom of this area here. It dipped slightly outside of there. But I'm not super confident in this continued bullishness out of the stock market. I think there's too many things going against it when it comes to the real world. And one of the biggest things is the election year. Not just the election year, the election season. We're moving in. I think we're less than 60 days away from the election, and neither one of these candidates, there's argument for Trump being good. There's new arguments for Kamala being good for the stocks. I don't think either one of them, based on their proposed economic plans, are going to be short-term beneficial for the stock market. So for me, a 25 basis point cut signals enough hawkishness to the market that maybe the Fed's job is not quite done. Maybe we're not entering a cutting cycle per se. Maybe this optimism for the stock market is a little overhyped, and we see some downside move. Now, in the spirit of anything can happen in the market, right? Which is a spirit I like to kind of always keep in mind when I'm participating in the market, is anything can happen. Protect our downside. In the spirit of anything can happen, pretending the pre-positioning ahead of tomorrow changes drastically, which it's 2 hours post New York Open, price is still hanging out pretty much where we were at the open. We're just consolidating, whatever. In the spirit of anything can happen, let's say before the FOMC meeting tomorrow, NQ dumps, and then we get the 50 basis point cut. Best positioning for buying up from that cut, it's going to be right in here, in my opinion. For me, this is where I would love to start scalping out of. I don't think it's going to happen. I don't see this much movement occurring ahead of the meeting. It could. Highly unlikely, though. So if we get the 50 basis point cut tomorrow, I am most likely not going to be involved in anything in Q unless we get that sort of positioning set up, which would mean we need to come down drastically from where we're at currently. And the reason why I wouldn't necessarily want to be buying from here is just it's a matter of targets. It's okay. We target this high, and then from there, what are we targeting? All-time highs again? Yeah, it looks like the next reasonable target after this level is near all-time highs and then all-time highs. And that's just tough for me. I don't like to buy at all-time highs. Granted, if you look at something like buying at all-time highs over here, it wasn't a bad move. This was a good trade, a good follow-through trade after breaking through these all-time highs. But it's just not something I tend to want to be involved in. So my ideal opportunity for the FOMC meeting tomorrow is that hawkish tilt with a 25 basis point cut and a concerned pal That would be sort of my ideal opportunity for tomorrow. As well as a yes, I wrote this. I'm looking at my notes right now, and I wrote this backwards. So I need to adjust that from my private group. But yeah, so slightly less cuts, more aggressive on NQ sells. All right, let's see. I'm gonna turn my attention to the chat now and answer some of y'all's questions. Anton says US dollar weakening ahead of cuts. I mean, that's below 100 is what you're calling. That's a pretty significant drop ahead of FOMC tomorrow. You know, if we're looking at the 2-hour chart on Doxy, you're talking about a significant sustained move prior to, I mean, right about 24 hours prior to FOMC. So within the next 12 candlesticks here, we need to see a significant fall off. I'm not saying it can't happen. Remember, the way that I operate in the market is sustain, keeping the idea that anything can happen. The market can absolutely surprise you. Now, this big of a drop ahead of FOMC tomorrow, I don't think it's very likely. I think the more likely scenario is something like this. Let's pull up where the actual meeting is tomorrow. We'll just call it right here, about an hour ahead of the meeting. I don't see this happening by 1 or 2 o'clock tomorrow. I could be wrong. What I do see happening is this. Something like this, meaning we are just going to hang out here. Markets are going to stay in this area. Maybe we spike below. Maybe we spike up. But relatively, I think the price will be hanging out right in this area up until the FOMC meeting. Again, anything could happen. You know, something drastic could happen. A new headline could pop off. I don't think the Feds will break their blackout, but we get a Fed leak. Anything could happen, absolutely. But most likely, I think we're going to be consolidating and hanging out ahead of the meeting. Do I think BOJ rises rates with the Fed cutting rates, potential of Nikkei dropping due to the value of yen rising? Do I think BOJ rises rates? I think I am long the yen in the long term over a macro scale of like the next few years. I think there's a potential UJ generational trade, but it is going to hinge, I think, more on the US than the Bank of Japan. And what I mean by that is I don't think Japan raising rates is going to be enough for sustained yen move to the upside. I think we need to see the yen raising rates with the coupling of the Fed entering a cut cycle and continued softening of the US economy. We get that combined with the, solid growth out of Japan, raising of rates out of Japan. Absolutely. I think continued yen upside. Now, on a technical basis, what I would love to see out of the yen, and this may be sort of based on some of I have a bit of a hawkish tilt when it comes to the dollar currently, simply due to the year due to the election season, due to what's happened all year with the dollar. We didn't get this sustained downside move out of the doxy until really July. It was like we started in June, but it was July that really pushed the dollar down out of this 106 area. Back in June and July, we were, the conversation was circling around, is the dollar going to break 106.5? Is the dollar going to break, and hang out above 106? Are we going to break 106.5? Are we going to see 107 and 107.5? Like, is the dollar headed north? We've been waiting. We've been waiting for dollar weakness. I have been waiting for dollar weakness since January, February, because of the projections for cuts for this year out of the Fed. We never got that. We got this sustained sort of upside, sort of consolidation move. And then once we had a good 3 months of downside inflation reads coming out, well, then the market started pricing in that rate cutting out of the Fed. So, with this move coming so late in the year and a pretty tumultuous election season upon us, I think anything less than aggressive rate cuts on the Fed's part, which has a danger in it, has dangerous elements in and of itself. Anything less than that is going to push the dollar up, in which case, my ideal positioning for the yen ahead of what I am looking forward to would mean we should see yen downside, which would push us back to these lows here. Should push us down to these lows, in which case this would be an ideal buying spot for me. Again, my favorite pattern, shoulder, head. If we can get this right shoulder to form, which we're looking at the daily chart, so we're talking about weeks of price action. This would be ideal. And then we start to see maybe the Feds, they go light on this one. But then come November, we've just seen such a deterioration in the labor market and inflation. And you certainly don't want these things to happen when you're looking at, like, you're talking about the economy as a whole. You certainly don't want to see a massive softening in the economy that hurts people. But if all that happens and we begin aggressive cuts in November, and our positioning is here come November, I think, all of that sort of lines up to a perfect storm to start buying the yen or selling UJ out of this area here. Okay. You're selling US 30 and US oil. US oil could be a good medium-term, long-term short, while US 30, I think, will rest lower and then go up. So I haven't been following oil too much, but I will say from what I remember about oil, it is, it's at some significant lows here. At a pretty significant low level here. Anticipating continued lower oil. It's bold. Can you explain, friends? I don't want to mess your name up, Francesco. Can you explain what your thinking is about oil fundamentally? If you have any fundamental thesis behind that idea, if it's just technical, that's fine. On a technical basis, this is not somewhere I would be wanting to sell oil from. If you've been in it, yeah, for sure. Capturing maybe the break of this low down, that's a solid move. If you haven't been in it and you're looking to get in it, not somewhere I would be interested in selling from personally. Let's see. All right, Anton is saying the dollar is going lower ahead of tomorrow. Fair enough, man. I mean, I'm certainly not going to sit here and go, no, it's definitely not. Absolutely could. Absolutely could. Certainly not out of the question at all. I just, again, I don't anticipate that. I anticipate a bit of consolidation. I anticipate a bit of hanging out in this area ahead of FOMC. And then once a FOMC drops, I mean, it's anybody's ball game. Like I said, if we get that 50% basis point cut, then yeah, I think dollar to 100 or lower is absolutely a worthwhile target. I would say maybe these lows here at 99.58. I feel like most of the market already priced in a 50 basis point cut with the rise of gold in the US market. If the Fed goes 25, will that all turn around with 50? How can they go above now? So arguably most of the market, right? Like a majority of the market has priced in a 50 basis point cut. But again, if I think it was about 10 minutes ago, I was touching on these probabilities are so near 50-50 that even though we have a skewed 50 basis point cut outlook, it's not 100% priced in, right? Like, in just a few months ago, or let's say if we can go further in the future. Yeah, no real good opportunities here. I wish I could see. Can I see historical? This is not. Yeah, that's not fun to look at. Okay, so I'll say this. If this probability was at like above 80%, and the higher the better, 88%, 90%, 92% priced in for a 50 basis point cut, absolutely. At that point, I would go, market's pretty well priced in for a 50 basis point cut. If we get that, I don't have a tradable edge. There's nothing that I could say is tradable. But because both of these probabilities are pretty close, like they're both 9% away from 50%. They're both within 10% of being, or I would even go as far as say like 15 or 20% of being 50-50. Either way this goes, I think there's a directional trade opportunity again. And the direction being for this specific case, I don't want anybody that's relatively new to FOMC or Fed rate cuts or anything to get confused by this. For this specific FOMC meeting, a 25 basis point cut is going to be hawkish, and a 50 basis point cut is going to be dovish. Again, my reasoning being the 25 basis point to me communicates we're entering a rate cut cycle, but we're not confident enough to move heavily. We're not confident enough in the sustained downside on inflation to cut more than 25 basis points at this time. The cut itself is not enough either. I think we then need to turn and look at the dot plot and listen to Jerome Powell. And if Jerome Powell is very concerned for the consumer, I would say overly concerned for the consumer side of inflation, that is going to be confirmation for the hawkishness out of a 25 basis point cut. Whereas if we get the 50 basis point cut and they come out and they say, we decided to cut by 50 basis points today, we believe we've done our job on inflation. Now we have to make sure we, I don't know exactly how they might phrase this, but basically they want to protect the job market. They want to, get ahead of downside risk on employment. That sort of thing is going to lean dovish to me because it means they feel they're behind, right? So that's sort of my thesis for either way this goes tomorrow. Not every Fed rate cut would I be looking for an opportunity no matter which way we go, but because these are both so close to 50-50, I am going to be open to trading either one of these outlooks if they're combined with a solid dot plot projection and tone from the Fed and Jerome Powell at the conference afterwards. With the raise of gold, if the Fed goes 25, will that all turn around? If the Fed goes 25 basis points, I would be, personally, I would be selling gold and selling the US stock market. This is a nice little rally though for gold, which is, we started talking about this almost a month ago. Once we get a nice sustained break out of this channel and price hangs out above it, maybe comes back and retests and rejects this area, this could be a decent push to the upside. Now, what I could see being problematic for this would be a 25 basis point cut tomorrow, in which case I would see a drastic move back down into this channel, in which case this to me would communicate a bit of a bull trap on gold. So you got to be careful. Got to be careful for the bull trap on gold. A 50 basis point cut, though, I think we'll see continued sustained upside on gold. Yeah, Anton keeps saying of 50 is unavoidable tomorrow. I mean, there's a 40% chance that it might not happen. So a cut is unavoidable tomorrow. We're 100% priced in for a cut, but it's so close to 50-50. I think again, it's a 50-50 shot. You have Anton, you have a 50-50 shot of being right tomorrow. So if you're positioned for that 50% cut, hopefully you get it. That's all I'll say on that. So very interesting day tomorrow, coming up tomorrow. I'm not going to be trading anything ahead of it. I'm not going to be getting positioned ahead of it. I like to wait and see what's going to be said, what's going to happen, and as soon as it hits the market, I'll be getting involved with something. Most likely in Q or one of the currencies, maybe the pound, depending on how the pound data comes out tomorrow. We have GBP CPI tomorrow. So if we get sort of a situation out of the pound tomorrow where, let's say we get pound downside and then we get dollar upside out of the FOMC meeting, I'll be taking pound sells all day, and then vice versa. If CPI out of the pound gives us a reason to buy it up, which is not going to be my ideal scenario. But if it does, then I'll be looking for USD to give us, or the FOMC to give us reasons for dollar downside. And if we get that, then I'll be buying the pound following the FOMC meeting. And then if we get a nothing burger out of the pound data tomorrow morning, then I won't even be touching this from the FOMC. I'll kind of double back and trade either some NQ or maybe yen. Just depends kind of on how everything comes out tomorrow. All right, guys. If you don't have any more questions for me, I'm gonna go ahead and call it. I will be back on tomorrow around noon ahead of FOMC. We have a full day, full show from A1 tomorrow. So I will see you guys there. You all have a good one. Trade safe. See you tomorrow.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.